So, hello everyone, and welcome to another exciting edition of the ES2 Practical Lawyers Academy webinar series. My name is Chima Abu, and I'm a Research and Development Associate at ES2 Training Limited. At ES2 Training Limited, our mission is to expand the knowledge of continuous professional learning with courses and training across various areas of practice. We have had this webinar series to launch our webinar series as they are stated to hold at 1 p.m. During lunch break. They will hold 3 times every week, Mondays, Wednesdays, and Fridays. However, in order to accommodate our participants, on Fridays we'll be holding the webinars at 11 a.m. And after every session, we try to make the material accessible to those who are interested. So before I go into the webinar, you can now watch our live webinars on our YouTube at my ES2 Legal. And please, when you're done watching, kindly subscribe for more content. Thank you. So this webinar will be discussing the debt recovery techniques in the banking industry, and some of the things that will be discussed will be what is debt entry, debt recovery techniques in the banking sector, the auto generation of pending debt statements, enhanced self-service capabilities, and many more areas that our panel will be touching. So if you have any questions while the webinar is, please type them Q&A or raise your hand, and every time it will be answered. So I would like to, okay, I would like to introduce our speaker. Unfortunately, Mr. Jonathan will be joining us, but I'd like to introduce our speaker. Her name is Miss Salau, and she is a partner at OAS chamber. So I'll leave her to start up this topic and also give a brief introduction of herself and tell us what she does. Thank you, ma'am.
Thank you, Chidima. It's a pleasure to be here this morning. Good morning, everyone. My name is Simi Salau, and I'm a lawyer, partner at OAS Law. Can everyone hear me? Can you hear me? Okay, perfect. So my areas of specialty include debt recovery, intellectual property, banking and finance, amongst others. And so this topic is well within something I'm very conversant with. And I'm just going to take it from a point of a practical point of view, because most times it seems like what we get is a theoretical aspect of doing it. So I'm going to try and be as practical as possible based on experience. So I just want to share my presentation. Just give me 1 minute. Can we all see my screen? Okay, perfect. So debt recovery techniques in the banking industry. We'll start with, first of all, what is debt recovery? So according to the Field Bank Recovery, Debt and Financial Malpractices Act, debt recovery is a means of any loan, advances, credit, accommodation, guarantees, or any other facility together with the interest thereon, which is outstanding and unpaid against clients of a bank in favor of the bank. So more or less, any credit or loan or facility or guarantee that any customer of a bank that is against and remains unpaid against any customer of the bank is what debt recovery is, as far as it's outstanding and it has become overdue. That's the key. It has to be overdue. So briefly, the statutory frameworks that cover debt recovery. So we have Companies and Allied Matters Act. Those of us that are familiar know that this has to do with mostly companies and how the procedures and the regulations concerning companies, especially for winding up. Then for Central Bank of Nigeria Act, because they regulate the banking industry. So they also have some regulations for debt recovery, Investment and Securities Act as well, Securities and Exchange Commission rules, banks and other financial institutions, that's for other types of banking, so microfinance and other banking institutions. The Nigeria Deposit Insurance Corporation Act as well also has some rules for debt recovery from customers. And then Asset Management Corporation of Nigeria, that is another big act, and even a whole sector just on debt recovery, especially for, if you remember, the failed banks we had as at 2008, 2009, and the whole crisis that happened when AMCON was then established to collect all this debt. Then the Failed Bank Recovery Debt and Financial Malpractice Act. That as well also regulates debt recovery. And the latest one, the Secure Movable Assets Act. So these are briefly the regulations that cover it. So into the key topic for today, the debt recovery techniques. So there are majorly four techniques that we'll go through today. So like I said, from a practical point of view, so the first one is negotiation. So this is an open, friendly initial discussion with the debtors. It's funny, but most times, if you can nail your process very well, most of the debt recovery actually gets settled at this point. So we'll discuss that further. Then mediation and arbitration, that's another step towards recovering debt. Then you have the lawsuits, which I like to say is the final resort because of the timing that it takes. We all know about the timing it takes in court and all the nitty-gritty around it. But it's also a very practical step, especially because you find out that by the time you start threatening lawsuits, some obligors or debtors would actually respond. So it's another key area for a technique for debt recovery. Then we have the enforcement, which is the big aspect. So despite, okay, you've gotten all your mediation or arbitration award, you've gotten your judgment in court, how do you then go about enforcing or actually getting the money? So these are the four main debt recovery techniques that we'll discuss today. So we'll begin with negotiation. So the first thing I always say is you need to investigate the debtor thoroughly. When I say thoroughly, there's something we call asset tracing. So asset tracing is the step where you investigate all the assets of of a debtor. So you try and get all the location, know in-depth knowledge about your debtor, because this will help you to be able to know what kind of tactic or strategy you're going to take to towards that debtor. So you need to know what strategy will work, because different people there are different type of debtors out there. You have those who, okay, maybe they don't just have money at the moment and they just need to renegotiate. You have those who are adamant and do not want to pay at all. So you need to understand their behavior and how exactly you're going to tackle it. So immediately for some, you know, okay, there's no point going into negotiation, or there's no point going into mediation. You go straight to the lawsuit, even though it's not advisable to go immediately into a lawsuit. First investigation is very important. Second one is, okay, you initiate contact with the debtor. So one thing to understand is, yes, you send all the letters, the final notice, the demand letters, you send all of that to the debtors. Most likely the bank has even already done that. So at this point, when as a lawyer, you come in and you take over the matter, what you want to do is introduce yourself and immediately communicate effectively and decisively as to exactly what you wish to achieve with the debtor. Sorry, obligor is another word you use for debtor as well. So I might use them interchangeably. And so you have to communicate effectively with them. So this can be done through, because sometimes you get some debtors that are not even in the countries, they're not in the country. So you have to find means to be able to contact them. And that is why I said the asset tracing and investigation is very important. If you get the debtor that is not in the country, how do you trace them? So that's where your investigation comes in hand. So you'll be able to know what kind of effective communication. Is it email? Is it phone calls? Is it social media? Yes, nowadays you really have to track your debtors through social media if that's the way you can actually find them. Is it via text messages? So all means of communication out there. You need to be able to use all the communication channels that are available. So at this stage, you can be friendly, but you need to be firm. So you need to let them know decisively, this is what we wish to achieve, and within this time frame. It's very important to work within a time frame, because if not, the debtor would not take it seriously. So it's important to work within a time frame. Let there be deadlines for every single conversations you have, every follow-up meeting. There has to be deadlines. And at this point, depending on who the obligor or debtor is, you might actually reach an agreement during this process. So a very good example, and actually, I would say about 60% of debts actually do get resolved at negotiation stage from experience. It might be different for some people, but if you are very good and you have the skills and done your research, most times you have all those things to hold against your debtor. So you let them know that I know you very well. In fact, there was a debt recovery we had to do. Like I said, some of them you find out that they're abroad, and went to the extent of finding the university that the debtor worked at. So we contacted the university. So that's how much detail you need to go in to be able to be prepared to be able to tackle your debtor. Because if not, they would just keep going back and forth with you. So so I said 60% at this stage, because they then start getting scared that, okay, these people really are serious about, and they know so many things about me, and they have, so most times they'll sit down and reach a negotiation with you. And always remember to put every single thing in writing, just in case they fall through, because you do get some of those that you do actually sign at the end of the day and they fall through and they don't follow up with their payment. So make sure everything, if it's a phone call, if it's a text, always send something as a follow-up to your conversation. This is what we agreed on this, and this is what we agreed. So at this stage, if you do decide that you enter terms of settlement alongside with the bank, definitely. So you contact the bank, let them know this is the settlement you've reached. If the bank agrees, both parties agree. Simple, they sign terms of settlement, and the debt will be resolved at this point. So another technique that works definitely is mediation and arbitration. So mediation is less formal. It's you have a point, usually appointed one mediator, which could also be the lawyer at this stage that is handling the debt recovery process, where both parties have a roundtable meeting. I like calling mediation roundtable meeting. So just to discuss, okay, this is how we can reach an amicable decision. We put all of it in writing and it gets resolved. Again, mediation and arbitration only work for parties who are willing. If they are not willing, it's very difficult and it would not be successful. Same thing with arbitration. Although arbitration is advisable to be used by corporate organizations. So for individuals, because of the cost, it might be a bit not advisable. Especially, definitely depends on the sum of the money we're looking at as well. So if it's a substantial sum, then yes, we could go through the arbitration route, which we know it has to be voluntary. So either they've signed an agreement beforehand to go. So sometimes you find out that, I know in bank loans nowadays, please excuse me. So bank loans nowadays do have some arbitration clauses, dispute resolution clauses in them, which include mediation and arbitration. So once they've signed that, that is key. So you can go straight into arbitration. But if there is nothing, so if you have the older contracts, where there is no arbitration clause. The parties actually need to agree to go into arbitration for it to be resolved. Now, the third technique is a lawsuit. So usually a civil lawsuit, because we know that monetary matters are civil. It can also be a criminal, it can also have a criminal element where there's fraud. So if during investigation, it's discovered that some of the documentation or information given were fraudulent, or they had there was a misrepresentation, then you start having fraud element. So you can actually run both of them concurrently. So you run both a criminal and a civil lawsuit concurrently. Usually the criminal one, you want to get EFCC involved, depending on, again, the substantial sum, and if there's so many elements of fraud involved in it. So you want to get EFCC involved in that. But so if you were to initiate a lawsuit against your debtor after going through the whole negotiation stages, which we've spoken about, and I would towards after this, I would go through some strategies for negotiation in depth. And so the lawsuit then comes in. You've tried to have a roundtable discussion, you've tried to reach agreement, but you just have an adamant and stubborn debtor. So you have no choice than to actually threaten or go ahead to file your lawsuit. Okay, so if you do want to commence your lawsuit, where you start from? So there are a couple of people that you can sue. So one is an individual debtor. So if it's just one person, you can sue that person. If it's a company, you can also sue them and the directors. So most times it's difficult to get the directors, but where the element of fraud, like I mentioned earlier, you can also join the directors in the lawsuit. Then guarantors. We actually forget this a lot when we are filing, especially for the bank, because most times we forget that the bank loans, they actually do get guarantors. So you can actually join your guarantor in the claim as well, where there are guarantors for the loan. So, so these are the essential people to sue. When we come to enforcement, you see that there's some other people that can also be joined as well for enforcement purposes. So the appropriate court, depending on the amount, is you have the magistrate court, the state high court, or the federal high court. And for AMCON cases, it's strictly just the federal high court. So when you start, if you've done your investigation properly, you should have already know the assets that your debtor or obligor has. And in order, because if you start lawsuits and they've disposed of all those assets, then the lawsuit becomes useless. So the first thing first to do, even I would even say if during negotiation stage, if you find out that you're having a difficult obligor, the first thing to do is to quickly go to court and apply for an injunction, so or preservation of the movable and immovable assets of the debtors, pending the determination of the court processes. So this will give you the time you need. So while the lawsuit is ongoing, at least this will preserve all the assets and hopefully stop the debtor from disposing of their assets. Now, where the debtor is a company, a winding up process can also be commenced. So like I said, where the debtors are also going to be held liable, you can start a winding up process concurrently along with your summary judgment, or if you're going to defend, then your full lawsuit. So all of this, you have to be filing. And that's one thing you have to do with debt recovery, to be very, very quick. Because like I said, you don't want them to dispose of the assets and you want things to be preserved pending the whole duration of this. So you have to be very fast as you're filing. In fact, most times what we do, you find out when we're doing this, is we actually do everything at one go. So all the motions, everything go in one how. So we already have main motion for the suit. We have the motion for the preservation of the assets. You have the winding up process, everything you file together so that they all go in at once. So earlier when I mentioned, if there's a criminal aspect to it, you can get EFCC involved as well. So EFCC, where you find out that, okay, these people were not true, or some things have happened to the assets, where you had liens or charges, also you can get EFCC involved as well. And they would deal with the criminal aspect. And they could even then charge the obligor or the debtor for criminal prosecution on the side as well. Sometimes we do, if we feel that EFCC might not handle it properly, you can get a fiat to be able to prosecute the debtor yourself. That's a whole different ballgame as well. Then you have the undefended list. So the undefended list, this is Order 12 of the Federal High Court rule. So this is where you have a debtor that does not have any defense for his debt, for his claim. So there's no defense to your claim. So that you easily go for summary judgment on defendant list with a writ of summons and to quickly liquidate the assets. Okay, based on the fact that the defendant does not have any defense. So if you do have a company where they have become insolvent, so the company is no longer running or does not have money, you can actually still recover your debt from them. So you give them 7 days within which the company and the directors, so you also involve the directors in this as well, because they were responsible, especially where there's been a lien or there are some assets that the bank actually had charges over, or debentures or whatever it might be, but maybe now they can't fulfill it. So you can go for winding up process immediately of that company, so that anything that is left at that moment, you'll be the one to get first priority of the assets. So usually they have some outstanding sum, and if they fail to, you go to court and you recover the debt from both the company and the directors. I've spoken about winding up processing. Then one thing not to forget as well is statutory limitation. Let's remember that most times there's 6 years statute bar for debt recovery. But the exception there is if the debtor had already started making some payments, or you have already started reaching some terms, then your statutory limitation does not apply. I spoke about liens earlier on. So the thing is, once you have a lien, it becomes easier for you. And it's very important as well that banks do have this. And some you do have some loans, depending on the amounts that they do have this, because this is just the easy way out for you. Immediately, all you need to do is just to enforce it, ensure that the asset is still there, quickly enforce against it. It's easier than having to start from the beginning. Okay, I want this asset and this asset. So once you have a lien over one thing, especially if you can cover the loan, attack it immediately. And okay, so the last one would be the enforcement. So now we've gone to court, we've done negotiation, we've done arbitration, we've done mediation, and we've gotten judgment in court. How do you now get this money? That is the nitty-gritty. Because we all know sometimes, those of us that are lawyers, we know how hard it is sometimes to get enforcement or to get someone to actually even pay, even though you've been given the judgment. Like I said, most times during negotiation, 60% of the time, they start paying up, but you also need to follow up to ensure that they keep up with their payment. Then, because if they fail to do at any point, then you have to go back to lawsuit. You also need to ensure that, okay, if during the lawsuit, the court process, court proceeding rather, they decide to sit down and settle, you've entered your terms of settlement, you also need to ensure that they keep on paying, because if they fail to pay, you need to come back again to the lawsuit. So all of that, it's very important. I will discuss all the strategies after this. So this is the enforcement, the major aspect. So ways you can do that is through a writ of FIFA. So this is where a debtor has refused to pay the money that has already been ordered to be paid in judgment. So here, the writ of FIFA is issued to ensure that the judgment is realized by seizure of the assets. Again, hopefully in your judgment, you should have written already that they cannot dispose of any of that. It should be written, and your motions rather, and hopefully in the judgment to the court should order that you cannot dispose of, the debtor cannot dispose of any of their assets. So, and if you've done your asset tracing, you already know the properties you want to go up against immediately. What we usually advise is once you get judgment, go straight for enforcement. It's not advisable for you to wait for the obligor to start paying, or if you feel is a willing debtor, yes, okay, you can wait. But most times for a debtor to wait till judgment, you know that person is very, very stubborn, especially if they have the sum or they have the property that they can liquidate to pay some of that loan off. Because even banks know most times they cannot, sometimes they cannot get 100%, but every bank would rather get 80% than none at all. So at that point, immediately after your judgment, you should go for enforcement. And so that's one way is writ of FIFA. Then we have the garnishee proceeding as well. So this is where against the bank account of the debtor. So where he has failed, you order a garnishee proceeding against any money that is outstanding, even the third-party banks. And this is where I was talking about where you can bring other banks involved. So what we do is even when you're filing your motion, you join other banks, not because they are parties to it per se, but probably because you know that your debtor has money in all those banks, and you want them from the beginning to be very aware that this judgment is going to affect them. So you already join them from the beginning, all the banks that you think your debtor has money in, so that immediately judgment comes, it's going to be very easy to enforce. So so that's the garnishee proceeding. And the final one is order nisi. So this is initiated ex parte. So this is an interim order. This is asking that so this is, you can also apply for this during the court proceedings. So you're asking the court that all the money that is outstanding, that is standing to the credit of the debtor in the hands of the garnishee. So it could be a bank, it could be a third party, anybody else. You want them immediately to ensure that that money stays there. So most times you can even get a representative of the garnishee to even come and swear an affidavit that, okay, well, this is the amount that was out, that is pending against this debtor in the bank as at this date. So that's when you come to enforcement, if that same amount is not there, then you know you can also go for the garnishee as well for dissipating those assets. So final and quickly, debt recovery strategies, some of which I've mentioned during my conversation. So asset tracing, very important. I spoke about multi-channel contact, spoke about the importance of social media now. Now social media has become very important. I remember one of the strategy used, one of the period was even through a third party. So you can even have a friend. So you use a friend to contact your debtor. Then you need to keep up-to-date statement. So your debtor must always be aware that this is what is outstanding, because interest keeps on running. So you need to let them know that at every point, this is the interest, and try to get them to pay. Then monitoring of your client, you need to monitor, that should be the debtor. You need to monitor the debtor at all times. Record all your conversations where possible. If you can't, come back, like I said, and write it in an email or something that is recordable. You need to follow up with deadlines, ensure that payments are made promptly, and don't miss a deadline, because I let them understand the consequence of missing a deadline. Then communication with the bank as well. You need to communicate effectively with the bank. They need to keep you up to date with, okay, this is what the payment that the obligor has made, or if there are any changes. And also during negotiation period, the bank also needs to be involved thoroughly in the process, because they're the ones that have the deciding that make the decision basically at the end of the day. So I think that is all. And thank you.
Thank you. Thank you, Simi. Before I go into the question, please can you send me your slides so that yes. Okay, so
Okay, yes, that's fine. I will send the slides
there are
to
a
you.
lot of questions that were sent in, but since you're the only one, you may have to try to answer them. Yes.
No problem. I will do my best.
Okay, okay. So first one is how effective is the litigation in debt recovery process in Nigeria?
Okay, how is
Effective is litigation in debt recovery process in Nigeria?
okay? I think I answered that question when I said yes. For most times, we feel that litigation should be the last resort. Yes, it is very effective because you do get some debtors that in between the litigation process, due to the burdensome process of litigation, they do come and sit down with you and say, okay, let's settle this thing out of court. So in that, I because of that, I believe that litigation is effective. And also because of the enforcement, litigation is also effective because most times, like I said, even you have some that, okay, you've entered terms of settlement, you've signed, everybody has signed, start making payments, they fail to, you still have to go to litigation at the end of the day. So that's where it becomes very effective.
Okay, thank you. Yeah, the second question is we have seen many people harass debtors with the military and other paramilitary forces. Are there any fundamental rights issues arising from such debt recovery procedure? And can the debtor in this circumstance request for damages?
Oh, very good question. So actually, in Nigeria, you're not allowed to use the police or any other force for monetary issues. I know that is really abused a lot, but actually you're not allowed. And I did mention an exception to that, and it's actually against the law. So yes, any debtor that feels that excessive force or military force was used against them, or even police, in a case where it's meant to be civil, can actually sue for damages. It's not legal. That's not a legal means. Everything has to be done through a civil suit, except there's a fraudulent element, which I mentioned earlier, where you can then get, okay, a criminal proceeding involved. And EFCC, for instance, is a good place to start.
Okay. Okay, thank you. The third question is, what has been the place of arbitration in the process of debt recovery, and how effective is it?
What has been the
What has been the place of arbitration in the process of debt recovery?
okay? Arbitration, like I said earlier, we most times don't really do arbitration. Usually mediation ends because arbitration too has its own separate rules and proceedings. So it's effective for corporate organizations. And I say corporate organizations because they want a more speedy settlement most times because of their reputation. And even most times for corporate organizations, they might not even get to arbitration. They stop at the negotiation aspect or mediation because one, due to timing, due to cost. So arbitration does work, but I would say it all depends on the amount again, because arbitration can be a bit costly. If even though faster, but it can be a bit costly. So it's effective more for corporate organizations, I would say. So it does have a role to play.
Okay, so is there a difference between the procedure for debt recovery for companies and government parastatals?
Aha, there's a difference for companies and government parastatals when it comes to enforcement. So you can still go ahead because for government institutions, first of all, you need to give them notice before you can even start a lawsuit against them. So they need to give you at least, I think, 30 days notice for them to be aware. During enforcement, you still need, and that is where suing the government parastatals or MDAs is very tricky. You still need the permission of the AGF, so that's the Attorney General Federation, to even enforce against any government institution. So that's the difference compared to when you have a company where you can just go straight into winding up and other enforcement.
Okay, okay. So, as touching insolvent companies, how is the newcomer improving the crime of debt recovery?
Okay, good question. Now has for insolvent companies. We're yet to see how, in practical terms, it's going to improve, because it does mention that insolvent companies can now be, it gives a procedure for you to go against insolvent companies, which I think I mentioned some of it through the winding up process, where you give 7 days demand notice to both the company and the directors. For now, personally, practically, we're yet to see how effective it is. So I can't really speak to it until I have actually tackled one. But I'm hoping that at least now we have regulations for the insolvency, so hopefully it should be effective.
So, will good analysis of trade debt recovery and debt management help measure an effective debt recovery in the banking sector?
Will good
Will good analysis of trade debt recovery and debt management help measures on help measure an effective debt recovery in the banking sector?
definitely. One thing I think we've not yet integrated in Nigeria yet is using analytical tools. That's one aspect, especially when you compare to abroad or other more standardized institutions. Even though our banks are really progressed when it comes to technology, but their debt recovery aspect, especially for following up with debts, you'll still be very surprised how in this day and age banks still feel to do some of their background work before giving loans. So yes, definitely. Analytical tools, technology, having the appropriate up-to-date what's the word, tools that can track your debtors is something that we still need and would help debt recovery in Nigeria.
Okay, okay. So how does debt financing bring about an optional capital structure in a banking sector?
How does debt finance
Yes.
bring?
Bring about an optional capital structure in a banking sector?
Okay, I'm not too sure about that question. Because debt financing is a whole different ball game.
Okay, let's keep that. Let's keep that. So, what is the recovery rate of legal action?
What is the
Recovery rate of legal action? Let's recovery legal action.
okay? What is the recovery rate of debt recovery legal action?
Yes.
Can I put a figure to it? Well, I would say it's I would say it's 50-50. Because why would I say 50-50? First of all, before you even start, you need to know if the debtor you're going against is someone that even has the assets. So if at asset tracing stage, you already find out that this person does not have assets, and so there's no point even going to litigation at all. Some people still do go ahead with litigation, then it becomes a waste of time. So, but I would say it's a 50% chance. And I would say 50% because most times, most of the litigation, they don't even get to judgment before they are rounded up. So that does not count towards that 50%.
Okay. Okay. Yes. And is there a legal prohibition of third-party debt collection agencies collecting outside of Nigerian borders?
Is there a prohibition of third parties collecting
Yes.
outside?
Third-party debt collection agencies collecting outside of Nigerian borders?
No, there isn't. That is fine. There is no prohibition on that. Even in Nigeria too, you can use third Lawyers are third-party debt collector agencies in court as well. So, so no, there's no prohibition using it abroad.
Okay, so this question is from Benga Ajayi. It says, please, where interim order of forfeiture is granted on the property traced and attached, not having knowledge that the debtor has disposed the said property before the institution of a suit, what is the implication and what is the step to take?
Sorry, slower so that I can get the question. Can you come again, please? I'm
Okay.
trying.
You can check the Q&A. It's in the Q&A, but I'll read it out again.
I'm trying to click on it. It's not working.
Okay. It says, where there is an interim order of forfeiture, where an interim order of forfeiture is granted on the property traced and attached, not having knowledge that the debtor has disposed the said property before the institution of the suit, what is the implication and what is the steps to take?
Okay, so the part as disposed of an asset. Is that the
Yes.
okay?
Yes.
So what are the steps to take? Okay. Yes, that does happen. You start litigation and you find out that they have disposed of the assets. Unfortunately, there's nothing you can do at that point, except where, if, for instance, maybe there was a mortgage over so maybe the bank or the person had the mortgage over the property, or there was a lien or there are charges, then you can still go after that property, even to the person that it was sold to. But apart from that, if you don't have any legal hold on the property, unfortunately, you have to find another asset to be able to cover your debt.
Okay. Okay. So, Menga Jai, I hope she has been able to answer your question. So this one is from Amachi Ihemagwa. How long does it take to enforce a judgment? Because our Sheriffs and Civil Process Acts, as well as our judgment enforcement rule, did not make provision for that.
Okay. How long does it take to enforce judgment? Because our Sheriffs and Civil Process Acts, as well as our judgment enforcement, did not make provision for that. Okay. Yes. There is no timing to. Actually, that's not true. I think there's a timing for you to enforce a judgment. I would confirm. But like I earlier on said, it's usually advisable immediately after you get your judgment. Okay, the question is, how long does it take to enforce? Okay, it does not take, there is no time frame for you. Enforcement can take, sometimes it takes months, sometimes it can take weeks. But as far as you started the procedure, I want to say there's a limitation on the enforcement. That's what I wanted to say earlier on. But as far as you started the process, your enforcement can go for as long as it takes for you to recover all your assets. But you need to act fast because the debtor can start disposing of assets.
Okay. Another question is, what measures can a bank put in place to minimize the loss they will suffer where a lender is unable to repay his loan?
What measures can
a bank put in place to minimize the loss they will suffer where a lender is unable to repay his loan?
Okay. So measures a bank can take to minimize their loss. One is definitely doing their background check first before they give out loans. Like I said, so we still see some banks that are very negligent when it comes to giving loans. They don't do their KYC properly. So that's one thing. Always ensure there's something that we call a rule, say an implied rule, where you never also give loans where the person does not have at least 100% assets to cover it. So what I'm saying is, so if you're giving out 20 million loan, the person needs to have at least 40 or 60 million worth of assets to be able to cover that loan, or even the property that they're going to give as what's the word? The property that they're going to give as their what's the word I'm looking for, please? I've lost my word now. As the collateral, thank you. The property they're going to give as the collateral, you have to ensure that it covers the loan that is being granted by at least 100%. So then also ensure. Another thing I know that banks are very bad with is communication as well. Banks do not really communicate with their debtors very well. So effective communication with your debtor is very important for a bank. And also giving realistic, I know this is going to be very controversial, but realistic interest rates. So at the beginning of when you give, sorry, when it comes to the negotiation period, you find out that some banks are not really willing to budge on interest rates when you know, okay, this person is really suffering to even pay the principal and they still pound on the interest rate. Sometimes you get some banks that, okay, they're willing to pause it for a while you make the payment. So I think generally it's just proper investigation that will mitigate banks' losses.
Thank you. Thank you. From Benga Jai still says in a garnishee order and it was discovered that the debtor does not have enough funds for third party. What other steps can one take to recover debt?
From a garnishee order?
Yes, in a garnishee order and it was discovered that the debtor does not have enough funds in third party. What other steps can be taken to recover it?
Okay, so money is not the only asset that you can go against debt recovery. There are cars. So you have movable properties, you have immovable properties. Sometimes we've done one, we did one debt recovery where we found out that the person even had jewelry worth more than, okay, not worth more than the loan, but a substantial amount to offset the loan. So when you find out that, okay, there's not enough money for the garnishee proceeding, please move on to other assets. Yeah, there's so many to think of. Like I said, there's winding up. If it's a company, you can go after their immovable assets. You can go after their movable assets as well. So don't just limit it to only what is in the bank.
Okay. So there are just two more questions left, and then I'll let you be. Okay. So, is there another framework for detecting and disciplining those bank officials who help lenders to obtain quick authorization or approval of their loans in return for a certain percentage of the loan?
Sorry.
Okay, is there a framework for detecting or disciplining those bank officials who help lenders to obtain quick authorization of their loans in return for a certain percentage of the loan?
It's the beginning, I'm not catching.
Is there a framework for detecting and punishing those bank officials who help lenders to obtain quick authorization of their loans in return for a certain percentage?
Yes. So that's why one of the things I was talking about, we find out there was fraudulent element in so there have been some bank loans that you find out that it's even the bank staff behind that failed to do their work, and that's because they probably knew the person and they just wanted to pass the loan, or they had kickback from that loan. So definitely you would also start a criminal proceeding against both the bank staff involved and the debtor that was also involved in that element of fraud. So that's where EFCC will come in. So EFCC will get involved in this. So yes, they do get punished.
Okay. And then final question says there's this practice among Nigerian banks that if a person has a loan paid and does not make any deposit into his account with the banks deduct money found in any other account of the debtor in other banks. Is this practice legal or authorized expressly?
There's a problem that's where
Should I repeat the question?
yes, please.
Okay. So there's this practice among Nigerian banks that if a person has outstanding loans to be paid and does not make any deposits into his account with the bank, the banks deduct money found in any other account of the debtor in other banks. Is this practice legal or authorized expressly?
Okay, yes. I think what I said, what you do is you usually join all the other banks where the person has money in the lawsuits as well. Yes. So yes, it's legal. You're allowed to do that. So that's where the garnishee proceedings also come in for enforcement. So yes, unfortunately it sucks, but if you do have money in other banks, yes, the bank can go after those funds as well.
Thank you so much for answering all the questions. We put you on the hot seat today. I really apologize for Mr. Jonathan's absence at today's webinar. Yes, it wasn't intentional.
Thank you.
Yes, and the questions, you answered them awesome. Yes, thank you so much. Thank you for taking our time to be at our webinar today. We really appreciate you.
Thank you, everyone.
A very big thank you to our sponsors, Alex, GLS, Great Chapel, Bloomfield Law Practice, and Advocate Law Practice for making this webinar possible today. Thank you also to our participants for joining in and for the questions that you sent. Thank you, Mr. Gbenga Ajayi, for all the questions. Really appreciate you. Thank you. And our next webinar will be on Monday, and it's going to be on digital assets and intellectual property. So for those that will be interested in this particular topic, please join us on Monday by 1 p.m. So thank you, Mrs. Simi Salau. Thank you so much. Have a good day.
For having me, and thank you.